Hey, it's Tax Quips time from TaxMama.com. The time has come, TaxMama said, to speak of many things: filing deadlines, disaster extensions, and various confusions this year's filing brings. Well, my friends, here it is, another October filing deadline, and this deadline applies to most individuals and calendar year corporations. You do know that your partnership S Corp and 1041s were due last month, right? Well, first of all, the good news in the face of bad news. The people in the path of Imelda will have until the end of January to file, pay, and everything else. Then in California, the land of fires, floods, and faults in the earth, some of our utility companies are turning off power totally in many parts of the states. Shocking and rather unheard of in the 21st century civilization, but after the utter conflagration that destroyed paradise last year, yes, it destroyed paradise, this is actually a prudent move during fire season, since the utilities are about a half a century behind in their routine maintenance. Any sparks sets off another fire. So why bring this up when talking about deadlines? Because both the IRS, who has sent notes privately to tax organizations, and the state of California have announced that they will waive late filing penalties for anyone affected. They do both encourage taxpayers to do their best to meet the deadline, but if they cannot, then just respond to the penalty notice by telling them you were affected by the power shutdown. Please be sure to print out the notice related to your area as support for your claim. Also, expect the IRS California wildfire page to be updated to include the current 2019 fires raging throughout the state. What about if you're still trying to prepare your tax return and you don't have any of the natural disaster excuses, but you are too frustrated and annoyed due to missing information and new tax law confusion? Well, you're not getting any breaks. So what should you do? File! Even if you're missing information, don't understand Section 199A or other parts of the Tax Cuts and Jobs Act, do the best you can to estimate, project, or compute the missing or confusing information as best you can. If you're really not sure about the numbers, tell the IRS and tell them why. Include a Form 8275 disclosure statement and identify each line in the tax return that you estimated. Include a worksheet, spreadsheet, or explanation for each item and explain why you had to estimate the amounts. Do the best you can with this. And remember, you have 3 years to amend the tax return once you get better information. The benefit of doing this? Well, the main benefit is to avoid the 25% late filing penalty that will kick in almost immediately after October 15th. The other benefit is you get it done and reduce your stress. You now have time to get help to fix any shortcomings in your return. Some business owners, there's some good news, especially those with no employees, still have time to reduce your balance due by opening and funding a SEP IRA until October 15th if you don't already have one open, or fund your solo 401k if it is already open. If you're opening a new one, be sure your financial institution sets it up properly and on time, and be absolutely certain to get your funds in a designated 2018 contribution status instead of 2019 if you want to claim the deduction on your 2018 tax return. Of course, if you have employees, you've got to make sure they are covered and funded as well, so this strategy may not work as easily for employers. If you have any balance due, please try to pay it in full. Though your interest on that balance is only about 3 or 4% per year, the late payment penalty is 0.5% per month, and that starts on April 15th. Also, remember to make your estimated tax payments for 2019, also due on October 15th. And remember, you can find answers to all kinds of questions about taxes and business issues and EA education free. Where? Where else? At TaxMama.com.